Anmol Bhansali, MD at Goldiam International. Anmol, firstly, good morning and welcome to the show. My first question coming to you is the rationale with regards to setting up a factory in the US, because clearly, if you see in terms of the US jewelry market, across what we are hearing is that it's slightly stagnant. So why the step? What's the capex behind it? And I mean, what's the strategy?
Well, thank you so much for having me here, Neeraj. So just to share, at Goldiam, we are predominant jewelry suppliers to some of the US and American largest retailers of fine jewelry all across various price points. So the idea is that there is currently a duty differential of 6% between polished diamonds and finished jewelry on all imports of jewelry to the US. So at the moment, we're still under evaluation and we're considering setting up a center stone setting facility in New York. Now, this is not a very large capex or very large investment in facilities. It will primarily be driven to set just the center stone of a bridal ring, which, as you know, drives the bulk of the value of a ring. So it is under evaluation and final decisions will be taken with the board after a clear understanding of what the duty differential and duty structures will be once we also get a clear idea of it.
Okay. So basically, are you saying that the step is mainly with regards to saving costs and taxes or tariffs, as you may call it?
Yes, so primarily it's of course to enhance the business that we do to the US retailers by giving duty-free or low tariff access to jewelry produced from India. Predominantly, this is related to the center stone setting of a bridal ring. And of course, it also helps to get closer to the customer.
Okay. Anmol, Neeraj here, good morning. Been a while that we've spoken, but good to be talking to you again. And congratulations, you've kind of become the brand to reckon with when it comes to conversation around lab-grown diamonds. Now, I would love to talk about two pieces with you, Anmol. One is, of course, LGDs, because when I look at your Q3 numbers as well, exports surging and lab-grown diamond share within your total exports surging. Talk to us a bit about how that piece is unraveling.
Absolutely, Neeraj. Thank you so much. We've constantly been in focus and at the forefront of lab-grown diamond jewelry exports to the US. Today, Goldiam would be amongst the largest purchasers of loose lab-grown diamonds, fueling our export demand of finished jewelry. For us, what we see in the customer base we have, which is effectively middle to premium income retailers in the US, they seem to have their end customer seems to have wholeheartedly adopted lab-grown diamond jewelry, and you can clearly see that in our Q3 results and the trend of Goldiam as a vendor to the supply chain over the last 2-3 years, where our lab-grown diamond exports as a percentage of our sales have gone from perhaps single digits to, at the latest quarter, north of 80%. And that is coming with significant revenue growth as well. So I think we've been very excited to deliver our Q3 results and our 9-month results. And the trend is well within that J curve of adoption, where to our end customers at least, it's been unstoppable.
Okay. Okay, and we saw this. I saw this post from somebody which said that even the certification requirements are now being done away with. And correct me if I'm wrong here, of course. So just wanted to understand from a low base, the uptick in the adoption of lab-grown diamonds has been very swift. But in an industry in its nascency, the numbers can look surprising for a number of years, right? So from where we are right now, if we consider this as the base, Anmol, to your mind, what's the kind of growth that you envisage in the adoption and the sales or whatever, whichever metric you can tell us as a benchmark for lab-grown diamonds in the next, let's say, 5 to 10 years?
So addressing your first question first, regarding certification, it's truly a retailer-dependent strategy. So each retailer decides what type and what company of certificate they want to have, and us as a vendor, we have to just execute the same. For us at Goldiam, it's a pass-through cost. Of course, there are some retailers on the larger size where lab grown initially used to be 10-15% of their sales. It's now crossed majority. They're looking to save costs and downtrend maybe type of certificate or evaluate whether they need to have a certificate at all, since inventory is now majority of what's in their store. And coming to your second part of the question, looking at today as a base, where do we see lab grown diamonds going? I mean, personally, I think there's still tons of room ahead to grow. On an industry level, the US retail industry, I believe the last I read, something like 20% of sales on a value basis was accounted for by lab grown diamond jewelry. So, especially in the middle to premium income segment, I think there is a long runway of growth still left ahead of us.
Right. Anmol, one question I have with you is with regards to the pricing and the impact in terms of your revenues, because clearly, I mean, they are known and popular for the versatility as well as if you talk about the affordability. I mean, an example, a carat which would probably cost you 7 to 8 lakhs, in a lab grown is somewhere in that range of 60 to 70,000. Do you think in terms of volumes, to match that number, I mean, companies might see a hit in terms of the top line initially, that's number one. And the second aspect is the pricing, because clearly we've already seen a 25 to 30% drop in terms of lab-grown diamond pricing in the last couple of months. What do you have to say on it?
So thank you, Hiral. So actually a funny misconception, just given the way Goldiam has been structured, and we share these numbers as well in our quarterly deck. Our average selling price of lab-grown diamond jewelry, because we employ larger diamonds, larger sizes, larger caratage jewelry, is actually more than 30 to 45% higher than our average selling price has historically been for natural diamond jewelry. It's around $400 to $450 for natural diamond jewelry versus lab grown is north of $650. So, funnily enough, any volume growth in lab grown diamond jewelry is coming with a value advantage to Goldiam as well. That is because we look at our business on a per jewelry piece basis, and the product sort of allows us to upsell the end customer from a cluster mixed stone sort of design in natural diamonds to large solitaire single stone jewelry designs in lab grown diamond jewelry. And coming to your second point regarding price declines, we firmly believe at Goldiam that at lab grown diamond prices have stabilized. They found a strong base. From here, we don't see a lot of any price decline coming ahead in the future. The focus is wholly and solely on growing volumes and growing the number of pieces of jewelry we can now sell. Directly, that will result and flow into both revenues and then, of course, PBT and PATs.
Anmol, one point I want to come in over here is when you talk about the pricing is stabilized. In the previous conversation as well, you mentioned about the cost with setting up a lab-grown diamond production unit or a setting unit is absolutely low, so the capex is very low, right? So notably, there is going to be oversupply that is going to come in because the space is not 100% explored. If that is the situation, and if there is oversupply that comes in, why will it not put pressure in terms of pricing?
No, so I believe that phase is already past us. The oversupply has come in, especially if you see in the last 2 to 3 years. Capacity of growing lab-grown diamonds in India, particularly Surat, Jaipur, and other such regions, have had a multi-fold growth. That, of course, as demand hadn't picked up to the same level, resulted in a decline in lab-grown diamond prices. Today, where we stand, the cost of growing is very similar to the actual cost of procuring loose polished diamonds in the wholesale B2B trade of BDB and SDB. We don't see any extra normal or abnormal profits from growing diamonds, just the segment of growing diamonds, which gives us supreme confidence to say that prices of lab-grown diamonds have truly found their base, especially in all diamond sizes up to 5 carat. That accounts for more than 95% of everything that we sell.
Just to clarify this, you believe that volume uptick and higher acceptability will make up for the quote-unquote revenue loss that you get in from natural diamond, because the price differential is just so high. So just trying to understand if the volume uptick can be so large. Actually, conversely, I wonder if the volume uptick can be even higher than what the revenues that you would otherwise have gotten from normal diamond sales.
So absolutely, thank you, Neeraj. As I mentioned, our ASP of jewelry products of natural diamonds is $400, $450. The average caratage in that ring is about half a carat of diamonds. Our ASP of lab-grown diamond jewelry is $600 to $650, over 40% higher, and the average caratage of diamonds that we put in those in that ring is about 1.25 carats of diamonds. So you can clearly see the customers trending larger in terms of the diamonds that they use. And for us, which is a unique thing at Goldiam, because we are a jewelry dominant, we are a company focused on jewelry production, not diamond cutting, diamond polishing, diamond trading. The ASP in lab-grown diamond jewelry is even higher.
Okay, okay. So you're saying people are not down trading. If anything, people are actually taking a higher cost jewelry because they're getting the larger stone on their finger ring or in their ears. Interesting. Okay, interesting.
More bang for your buck. Yes.
Okay, and could that happen in India too is the question really. But fair call. Okay, Anmol, I have one final set of questions, and that is around your expansion plans. Because correct me if I'm wrong here, but have you said on the calls that you will move from 20 stores by the end of FY25 to nearly 200 in the next 3 years?
Sure. Thank you for the question, Neeraj. So Goldiam has a very unique proposition where we have a B2B business in the US, cash flow generating, stable, and free cash flow dominant, which is stable and growing. And the benefit of that is allowing us to invest in a brand and a retail story in India. So we have launched Origem. We have 4 stores in Mumbai itself and Mumbai Metro, which already today makes us the largest single lab-grown retailer in the Mumbai region. We have plans, as we have mentioned, to open 20 to 25 stores in calendar year 2025, not FY 2025, calendar year 2025. Which is dominant and focused in all 3-4 metro regions of India. Post that, yes, we have plans to enhance this store fleet to 150 to 200 stores within 3 to 5 years. Again, that will be pulled in and a result of course, increasing COCO stores, but down the road in the next couple of calendar years, opening up to franchisees as well. Today, 100% of all our plans are COCO stores, and every fleet expansion that we are currently looking at will be undertaken by equity at Goldiam itself.
Well, sorry, just one last question because slightly running out of time, but you would do all of this with internal accruals, or would you raise capital for the same?
Great. So at the moment, there are no decisions. For this calendar year, we will most likely be looking at internal accruals, unless we have an outstanding opportunity available to us. And it's, of course, dependent on what the board sees value being available in, and then the performance of Origem and how we want to fuel its growth and how fast we want to fuel its growth to take it further.
The street seems to be liking what Anmol is saying. His stock is inched up from the red into the green, or maybe it's the market as well. But Anmol, I mean, great understanding the plans if you have. And thank you so much for speaking to us today and giving us your thoughts. All the best with all the plans.